Hey, what's up? Trader Tim here doing a trade recap video. It's the 12th of December, 2024, and we're getting into the end of the year. We've got next week, and it's going to be a bit of a chopped up week. That's really the last week of trading, though, because I don't do any trading between Christmas and New Year's. And so next week we have the Fed meeting on Wednesday. Tomorrow, Friday, the 13th, is rollover. So we'll be moving from the December contract into the March contract. Most platforms will auto roll. So like in Thinkorswim, your /ES will just pull up the front month. So tomorrow that'll switch over to March. And then if you're on a platform or like pulling up your trade ladder manually, just make sure to use the H25 or H5 depending on the platform, so that you're on the March contract. And so tomorrow's rollover, Wednesday the 18th, Fed meeting. Friday the 20th will be expiration. I also don't trade those 2 days, the Fed meeting day and the expiration day. So really that gives us 4 more trading days of the year. And going into this December, I wasn't, you're never, when you're going into December, you're not trying to knock out your year in just a couple of short weeks. It's more about kind of finishing off the year on a high note. And if that means, taking fewer trades and having more gaps in your trading, that's okay. You just, you're not going to make your whole year in 1 month or a few short weeks, but you could really do a lot of damage, and more so psychological damage if you, go off the deep end and try to be a superhero in the last month. So this week, kind of hit or miss with trades. I had a couple of plus 20s on the 15-minute opening range breakout. So yesterday got a plus 20, and then on Monday we had a plus 20 where we didn't fill the gap. We broke below the first 15-minute bar and then got 20 points hit on the ES. And then Tuesday we filled the gap, so there was no trade. And then today we broke to the downside, but then came back up. So I was stopped out for -4 on that one. You can see today's price action. These two lines here this is our 30-minute range, and we've just kind of hovered inside of it, slightly above it, slightly below it all day. Our breadth has been inside a 2-to-1. So we really didn't have a whole lot of follow through. We're kind of, this value area low from yesterday has been keeping us below. We've been staying below value area. And if we go to the daily chart real quick, we can see how we're just kind of moving sideways up near these all-time highs. We've got this 21 EMA below us, and I would expect that we eventually tag up on it here. Sometimes the way to tag up is you move sideways, and then that 21 will catch up to it, and you'll tag up like over here. Other times, if we get a couple of down days, we can drop fairly quickly in a day or two and tag up and then likely bounce off of that level. So with today's break below yesterday's low, that makes this candle a lower high right here. And, that lower high could give us a little bit of momentum in, tomorrow's Friday. So with the last day of the week, maybe we can push down. Otherwise, if tomorrow we break today's high, then you really just have a very small triangle where you have the high, the low, and then lower high, higher low, probably something like another lower high, maybe a higher low, and then boom, you break out into new highs again. So nothing really super bearish screaming out here, just more of a consolidation in this tight uptrend. If we take a glance at the retracements, I put up the next fib retracement, but we're, the chances of coming all the way down 59.93 might get there on like a tail if we were to form like a bearish day and then halfway through the day start to rally, tag up on that 50%, and then put like a hammer in there in the daily chart. But otherwise, we came just shy of the prior 50% retracements, -23. And so then the next step in the process is to draw the next retracement. So as far as today's trades, I took a couple of an inverted hammer and one hammer. So this early one, I probably could have skipped it. I took this inverted hammer short. We came right up to the 21 here and then sold off. We had a little bit of a sell-off on the first 3 bars. Now this is the 1 minute chart, so this is pretty early in the day. So I thought, oh, well, if we get a breakdown, then, this would be the entry to get us into it. And we got a little bit of a move, 1.5 or so, but then it just took me out 1 tick above that candle's high. So small loss on that one. Then the 15-minute triggered. And then over here. So this was a really nice pattern. This is a great pattern because it's a higher low. So we put in the low, and then we bounce, we pull back, and then by breaking this candle's high, that solidifies that candle as the higher low. So, the body is just about 50% of the candle. So it's a little bit of a stretch to be a hammer, but pretty dang close. So got long 1 tick above that candle's high, and then just trailed each low on the way up. When we get this situation where we have these 2 bars are inside of this bar's high and low, I just leave the stop alone down here and then wait to move it until this candle closes. So anytime we have inside bars, I just leave the stop alone. So this one took me all the way up. Here was about 6 points, a little over 6 points for that run up there. So ended up a little over, if you divide it down, for one contract, it'd be about 5.25 points on the day for the 1 minute trade. So only those 2 trades are all I had today. Earlier this week, had just a couple of trades on the 1 minutes. Didn't get really much momentum going. So those 20-minute or 20-point profits on the 15-minute opening range breakout kind of have carried the week so far. So we'll go into tomorrow and see what we get. Otherwise, be careful next week, especially on Wednesday and Friday. I just don't trade on those days. And so it's kind of a scheduled break in there. So we'll trade tomorrow, Monday, Tuesday, see what Thursday brings. And then we'll go into the end of the year and kind of go through your trade log, review your notes and your trade journal if you keep one. I'll go through my trades, see if anything stands out. I've kind of been doing that in the last month or two, going through and seeing if anything jumped out at me this year. We had low volatility this year, so you can kind of go back to like 2020, maybe the early 20 teens. There were a couple years in there where we had the 2008, 2009 sell-off, and then volatility did kind of come down. Maybe 2011 in there. So I like to compare my trade stats from this year and compare those to other times just to see if anything jumps out, similarities. And it's always good to be able to, process your trades in groups and chunks so that you're not just letting one, winning or losing trade be an outlier and influence your trading decisions. So that's what I got for you today. We'll finish here on let's finish on the weekly chart just so we go out a little bit further. You can, just blockbuster year of growth. You go over to some of these individual stocks, your Axons, your Netflix. Look at the dollar amounts here. Just going back, halfway through the year, 590. We're up at 925. Tesla, I'm sure everyone's looking at 200 back in October. Now we're up here at 420. Most of I use the Vanguard VUG as my long-term, boring old buy and hold ETF in my retirement accounts, which has a big chunk of those tech stocks. So 333 down here back in July, all the way up at 425. So huge 20, 30, 40 percentage point run-ups here in tech after what was kind of deemed to be a pretty slow, lackluster year. So it's good to not try and dump everything just based on projections and forecasts. Otherwise, you get stuck saying, well, I dumped everything going into this year thinking that it's going to be a bad year, and now how do I get back in? How, where is the buy point? And so eventually there will be a pullback when you get these big lifts off of the trend line, or in this case, the moving average here. We will make a pullback, but it could be a while. And sometimes the pullback is not even enough it certainly, we've never retraced back here to COVID lows, let alone the pre-COVID highs. And so, getting down here is about as close as we got. So, something like that, just above where those pre-COVID highs are. So it can be enticing to want to micromanage your long-term accounts if you have like a 401k or a IRA or something like that, because you're actively trading. But I find it very beneficial to keep the two real separate. I do extremely boring buy and hold in a portion of my net worth with my retirement account, and then day trading every single day, which most would consider high risk. I don't look at it that way. And then when you factor in other smaller chunks of your money being put into things like Bitcoin, or maybe you invest in a business, or kind of angel investor type thing, you can really leverage your money while still keeping a very strong handle on your risk, because you've got a bigger pool of funds diversified into lower risk environment. Certainly in the last year or two, the just having cash sitting there ready to invest, you're making 4 or 5%. Won't be that way anymore. But you don't want to. I guess we'll end on the idea here that if you tie up all your money when times are good, then you're forced to sell assets when times are bad, either because you need to free up cash or because there's another opportunity present. So I am completely not against selling some investments for profit when times are really good, and having a little extra cash than most would probably deem wise, I guess. But then when the market does turn, or when there are opportunities, you can shift that cash into those opportunities, and then you get a 2020 situation where you get this 2-month sell-off. You can go full gas into buying up securities, stocks, whatever your investments or speculative investment vehicle is, and then you reap the benefits, in just a few short years. So that's what I'll leave you with here as we go into the end of the year. Hope you have a great holiday season, and best of luck in your trading. We'll talk to you all soon.